In 2026, something unusual is happening to money. Not a financial crash, not banks shutting down, not governments collapsing. Something far quieter and far more powerful. Every day, millions of people check their bank balances, send digital payments, invest in stocks, or apply for credit. To them, these are simple financial actions, routine, ordinary, nothing unusual. But behind those everyday transactions, something else is happening. Invisible systems are watching, not just watching, learning. Every purchase you make, every payment you send, every subscription you start, every loan you repay, every investment decision you make, all of it becomes data, and that data feeds artificial intelligence. Here's the part most people still don't realize. The systems analyzing this data are no longer run only by banks or governments. Increasingly, they are operated by the largest technology companies on Earth. Companies that already control search engines, smartphones, cloud computing, online marketplaces, advertising networks, and the digital platforms billions of people use every day. The same companies that know what you search for online, what you buy, what videos you watch, what apps you use, where you travel, and how you spend your time. Now, those same companies are also helping shape how money moves across the global economy. And when artificial intelligence merges with that level of financial influence, something remarkable begins to happen. Money stops being just a tool. It becomes a system of prediction, a system of influence, and in some cases, a system of control. To understand why this shift matters, you have to understand a simple truth about modern finance. Information is more valuable than money itself. For centuries, economic power came from physical assets: land, gold, oil, factories, industrial companies. But in the digital era, the most valuable resource is something else: data. Not just basic information, but behavioral data. Data that reveals how people live, spend, save, and make financial decisions. What people buy, how often they spend money, how quickly they repay loans, which brands they trust, how their income changes over time, how they react to financial risk. Artificial intelligence is built to analyze patterns like these. The more data an AI system receives, the better it becomes at recognizing patterns inside human behavior. When an AI system studies billions of financial actions across millions of people, it begins to see things humans cannot easily see. It can predict who might struggle to repay a loan. It can identify which regions will increase spending next year. It can recognize which industries are about to grow. It can detect which companies are losing momentum. And sometimes, it can even anticipate economic changes before economists notice them. The organizations controlling these AI systems gain something extremely powerful. They gain foresight, the ability to see financial patterns before everyone else. Now imagine what happens when that foresight merges with global financial infrastructure. This is where the role of major technology companies becomes impossible to ignore. Companies like Amazon, Google, Apple, Microsoft, and Meta platforms already sit at the center of modern digital life. Billions of people interact with their platforms every single day. They power the smartphones people carry in their pockets. They operate the cloud servers storing massive amounts of global data. They run search engines that organize the world's information. They manage online marketplaces where products are bought and sold. They provide artificial intelligence tools used by businesses across industries. At first glance, these platforms may appear separate from the financial system, but beneath the surface, they are deeply connected to it. Consider cloud computing. Today, a large portion of the global financial system runs on cloud infrastructure. Banks store transaction data in cloud servers. Investment firms run trading algorithms in cloud environments. Fintech startups rely on cloud platforms to launch digital financial products. Payment networks process transactions through cloud-based systems. Many of these cloud services are operated by technology companies. Platforms like Amazon Web Services, Microsoft Azure, and Google Cloud provide the computing power that modern financial institutions depend on. This means some of the most critical financial infrastructure in the world now operates on technology platforms originally built for digital services. Inside those platforms, artificial intelligence continuously analyzes patterns. Fraud detection systems monitor suspicious transactions. Credit scoring models evaluate borrower risk. Machine learning tools forecast market trends. Customer behavior models analyze spending patterns. All of this happens constantly, often without users realizing it. But the influence of technology companies in finance goes even deeper. Think about digital payments. In the past, payments mostly moved through banks and credit card networks. Today, digital wallets are changing how people interact with money. Companies like Apple operate systems such as Apple Pay. Google provides payment tools like Google Pay. Online platforms like Amazon process enormous volumes of global transactions through their marketplaces. Every one of these systems collects valuable financial data: what products people buy, how frequently they spend money, which brands they prefer, how often they return purchases, how spending patterns change over time. To a human analyst, this amount of information would be overwhelming. But to artificial intelligence systems trained on massive data sets, it becomes something incredibly valuable: a map of economic behavior. And once AI understands behavior, it begins to influence it. Artificial intelligence does not only analyze financial decisions. Increasingly, it shapes them. Recommendation systems suggest products to buy. Search algorithms decide which financial services appear first. Credit systems determine who qualifies for loans. Automated investment platforms rebalance portfolios. Advertising networks target users with financial offers tailored to their predicted income and spending habits. All of these systems guide financial behavior, often subtly, often invisibly. Millions of people believe they are making completely independent financial choices. But many of those decisions are influenced by algorithms designed to optimize engagement, spending, and platform growth. Now imagine this influence operating across the entire global economy, not just in one country, but across billions of users. When technology platforms influence consumer behavior at that scale, the impact reaches far beyond individual purchases. It begins shaping entire markets. Companies that control massive data platforms gain early insight into economic trends. They can observe spending behavior in real time. They can detect supply chain disruptions through purchasing activity. They can recognize rising demand for new products or services. They can see economic shifts long before traditional institutions notice them. Artificial intelligence transforms this data into predictive models. Models that forecast market changes faster than traditional analysis. Models that identify profitable investments before trends become obvious. Models that anticipate shortages, demand spikes, and emerging industries. When tech companies combine AI prediction with massive streams of financial data, they gain something few institutions have ever possessed: strategic economic intelligence, insight into how money moves across the global economy. And as artificial intelligence continues improving, that insight becomes even more powerful. Because the future of finance may not belong only to those who control money itself. It may belong to those who control the systems that understand how money moves. Systems that can analyze economic behavior faster than any human institution ever could. Systems powered by artificial intelligence. If you found this perspective interesting, take a moment to like the video, share it with someone interested in technology or global economics, and leave a comment with your thoughts about the growing role of AI in the financial world. And if you want to explore more deep insights about the future of money, technology, and global power systems, make sure you subscribe and stay connected for the next video.